Let's move on to J&K Bank. Talk a little bit more about the boost from the center for the J&K government, as well as what the outlook is when it comes to their guidance. We have Baldev Prakash, who's the MD and CEO, now joining in. Thank you for taking time out. Now, the government has made that special provision. It's 7,900 crores for J&K. I just wanted to understand what your take is, how you're planning to benefit from these.
Yeah, so good morning. So we are an agency bank for government of J&K and Ladakh. So for that purpose, we have been disbursing the pensions of Jammu and Kashmir employees, retired employees. So we were getting the reimbursement, but there was some lag in that. And now that lag will be over, and we are expecting that going forward, all this amount will be settled in T+1 basis, as in respect of all agency banks RBI guidelines.
Right. So if one's correct, as of FY24, Mr. Prakash, you have a pending amount from pension payment, which equates to around 3,253 crore rupees from the government of Jammu and Kashmir. Should we expect repayment of these dues then?
So, Aisha, this has been already repaid just before the budget. This has been already repaid. I think we have given some disclosure in our balance sheet also for this quarter. So there is nothing outstanding as of now from J&K government.
I want to now talk about earnings then, because we've seen another quarter of very strong recoveries for you. Credit cost, though, was negative. Tell me if the asset quality is going to be maintained for the entire fiscal.
Yes, Aisha. Asset quality, actually, we have done very good. And in fact, we have done even better than the projections last year also. This year, we have come down below 4%, and which was a dream come true for us. Going forward also, this year, our guidance is to come to 3.5. In fact, the signs which we are seeing now, maybe we can be ending below 3.5%.
J&K Bank used to enjoy huge advantage because of the geographical situation. No other large banks were there, and that was almost like a monopoly business. But situation has changed now. How has that changed your life?
So, Nikunj, I think we have discussed this earlier also. As far as the competition is coming, we welcome the competition, but it is mainly coming in the major centers like Jammu and Srinagar. And our strength mainly lies in the RUSU areas, rural and semi-urban areas. While in the urban centers also, as of now, we are not facing any threat, because we have also improved our connect with the customers. The service level have gone up. The digitization of our services has gone quite reasonably up. And I believe that we are not having much of a threat as far as the urban centers are concerned. And of course, RUSU center, we will continue having a dominance.
For banks, there are multiple ways in which they lend: retail, MSME, SME, and then corporates. The geographical area where you concentrated, that space, unfortunately, or that geography does not have too many large industries, which means your corporate exposure to large accounts will not be there. Is that a deterrent factor for J&K Bank?
So no, Nikunj, actually, this is a strength for us that the J&K territory, J&K and Ladakh territories are supporting our RAM, that is retail, agriculture, and MSME. The corporate book is mainly supported by the rest of India branches. And the same strategy has worked very well for us for the last 2 years. And you must have seen the good results of that strategy. We will continue following the same strategy.
Priority sector lending norms, I mean, how do you think in that geography you're able to keep up pace with the RBI requirement?
Yes, definitely. The priority sector lending is already achieved for us as far as the minimum priority sector lending is concerned as per RBI guidelines. And similarly for agriculture also, though last year we had some shortfall in small and marginal farmers, but this year, given the focus of government, we have a unique program in J&K called Holistic Agriculture Development Program, which is unique in the country. This is aimed at improving, rather doubling the income of the farmers during this year, and a huge amount of focus from the government. We are very much part of that. So this will help us in improving the agriculture. Whatever shortfall was there last year, we are confident that this will be covered this year.
About liability book per se, I mean, SBI numbers which came out of the weekend, there is a struggle. All banks are complaining that all the excess savings are getting diverted into stock markets. Cost of liability is going higher, saving rates are going higher. Are you also struggling with getting additional liability now?
So not struggling, but little bit of challenge that is expected. And we have taken some steps, like last time we have discussed about our QR code network, improving it further. And then I think some regulatory actions which have been taken, this money which was going to the capital market is expected to stay back to a certain extent in the banks also. While we have to be cautious, we have to be careful, but as of now, there is no concern as far as our bank is concerned.
Right. And given that the RBI is also being vigilant on the LCR ratios with the draft guidelines, what's your internal assessment in terms of the impact?
So our LCR ratio is 135%, and we have calculated internally that the maximum impact on LCR will be coming up to 15%. So that means we will be going maximum up to 120%. Still, we are much comfortable as far as the expected RBI guidelines.
Okay, Mr. Prakash, so good to have you on the show today. Thank you for taking the time out and chatting with us.
Thank you, Aisha.